In this video, we will analyze if XCN coin is ready to explode. Please watch until the end so you don't miss anything. One of the most notable elements on the chart is the falling trend line that forms from the top. As long as the price remains under the influence of this downtrend, the downward pressure will continue, and it will be difficult for a new bullish wave to start. This is because downtrends represent periods when investors increase selling pressure and buyers lack sufficient strength. Currently, the price is approaching this falling trend line and is at a critical point. If it can break this trend upwards with strong volume and retest it, it will start to rise. Another important element on the chart is the bullish order block at the bottom. This is an area where the price has reacted several times before and initiated an upward movement. Bullish order blocks represent areas where institutional investors and big buyers are buying heavily. Therefore, when the price arrives here, it is likely to face strong demand. So far, we've seen that every time the price has approached this area, buyers have stepped in and the price has reacted upwards. This tells us that this is an important support point. If this order comes to the block again, it may get another reaction. Another important element on the chart is the bearish order block at the top. This is a critical resistance area where the price has already reached and faced strong selling pressure. If the price moves towards this area now, it is likely to face selling pressure again. It is unlikely that it will break here in one go. It should only try a few times. According to Elliot wave theory, price movements usually form an impulsive structure of 5 waves. At the moment, the first and second waves are complete. The most critical point here is the formation of the third wave, because in Elliot theory, the third wave is usually the longest and strongest. The third wave should reach a minimum Fibonacci level of 1,618. Fibonacci ratios are important tools used to identify support and resistance levels in the markets, and the third wave usually needs to extend to the 1.618 Fibonacci expansion level. However, there are some critical points to note here. First, the depth of the second wave is important. If the second wave goes below the starting point of the first wave, the Elliot count will be invalid. In addition, there needs to be strong volume in the third wave. The third wave usually has the highest trading volume. If the price is moving on low volume during this wave, the expected strong rise may not materialize. And the third wave comes quickly and suddenly. One of the notable patterns on the chart is the descending wedge pattern. This pattern usually appears towards the end of a downtrend and is considered as a potential reversal signal. The descending wedge pattern consists of 2 falling trend lines that are converging. The upper trend line allows the price to make lower highs, while the lower trend line creates lower lows. However, there is an important point here. The distance between the lows gets narrower and narrower. This indicates that sellers are starting to lose their strength and buyers are preparing to step in. As the price gets stuck inside the pattern, the volume usually decreases. This means that there is uncertainty in the market. However, a strong bullish move usually starts when the upper line of the wedge pattern breaks. This is because the breakout of the pattern indicates that a new direction is emerging in the market and buyers are taking control. Once the upper line is broken, it should make a retest, and after the retest, it is ready to move up. Another notable structure on the chart is the ascending channel pattern. Such channels are usually formed within an uptrend and indicate that price action is fluctuating between certain support and resistance levels. The ascending channel consists of 2 parallel trend lines. The upper line acts as resistance, allowing the price to make higher highs, while the lower line acts as support, allowing the price to make higher lows. This structure indicates that bulls are dominating the market and the price is in an overall uptrend. Currently, the price has touched the lower band of the ascending channel. The lower band of the channel usually works as a strong support level. If the price can hold here, a new bullish move towards the upper band of the channel may begin. In such channels, reactions from the lower band are usually considered as buying opportunities and the price is expected to move up again. However, there are a few important points to note here. First, it is important how the price reacts after touching the lower band. If the lower band works as a strong support and the price holds there, it could start a bullish move towards the middle band and then the upper band of the channel. On the other hand, if the price breaks the lower band, this could indicate a breakdown of the ascending channel. In such a scenario, the price is likely to make a deeper correction. In particular, if the price breaks below the lower band on volume and stays there, it could signal a continuation of the bearish move. Therefore, it is critical to watch how the price will react at the lower band level. If it does not break the lower band, it will go to the middle band and the upper band respectively. When we look at the Bollinger bands, we see that the bands are narrowing significantly. This indicates reduced volatility and compression of price action. This narrowing of the Bollinger Bands usually indicates that a period of consolidation is taking place, and the price is moving within a certain range for a while. However, this squeeze doesn't last long and is usually considered a harbinger of a big price move. Bollinger Bands consist of three main components: the upper, middle, and lower band. The upper band usually indicates that the price is approaching the overbought zone, while the lower band indicates that the price is approaching the oversold zone. At the moment, the narrowing of the Bollinger Bands indicates that the market has been moving with low volatility for some time, and a major directional breakout is approaching. In technical analysis, this is called a squeeze or volatility contraction. Pinch periods usually occur before a major price move and should be analyzed in conjunction with other technical indicators to determine which way the price will break. Such band narrowings are usually followed by a strong move, and the price makes a hard breakout either to the upside or to the downside. Especially when the bands remain narrow for a long period of time, it indicates that the price movement will be stronger. This is because the energy accumulated in the market can suddenly be released at a certain point and start a strong trend. The movement can sometimes take a long time to come, we just need to be patient. Looking at the MACD indicator, we see that it is currently making a cross below the 0 point. This suggests that the market could signal a rebound off the lows and signal the start of a possible uptrend, especially when the MACD line crosses the signal line from below to above. There is usually a momentum shift in the markets, and buyers start to gain strength. The MACD indicator is used to analyze the current trend of the market by measuring the ratio of the short-term moving average to the long-term moving average. A cross below the 0 line usually indicates that prices are in oversold territory, and the market is slowly starting to recover. This is an important technical signal for traders and can signal the beginning of trend reversals. Such crossovers, if reinforced by volume support, increase the chances of a bullish continuation. However, when the MACD crosses below the 0 line, it doesn't mean that the uptrend has fully started, and if it can extend this cross above the 0 point, the uptrend will accelerate further. When we look at the RSI indicator, we see that it was previously in a significant downtrend. However, it has made a significant technical improvement by breaking this trend to the upside. As of now, the RSI seems to have entered a retest phase after this breakout. A retest usually occurs when the price tests the previously broken resistance level as support, which is critical for confirming a new uptrend. The RSI breaking the downtrend indicates that the selling pressure in the market has subsided and buyers are starting to gain strength. However, in order for this breakout to turn into a healthy uptrend, the RSI must not fall below the downtrend line again and must hold above the breakout. And when the RSI rises, the price rises with it. When we look at the Vortex indicator, we can see that if the blue line crosses the red line, it is bullish. And if the red line crosses the blue line, it is bearish. In the current situation, the red line is above the blue line, indicating that the market is bearish. The upper red line indicates that sellers have a stronger control over the market and prices tend to move downwards. This situation on the Vortex indicator suggests that the trend is weakening and prices may decline further. When the red line crosses the blue line, it signals a period when the buyers lose strength and sellers start to step in. This could create a negative sentiment in the market and lead to more selling pressure. But if the blue line crosses above the red line, then the uptrend starts. Currently, the price is trading very close to the 200 EMA, but has yet to cross it. The 200 EMA, as an indicator of the long-term trend, can give a strong bullish signal if the price breaks above it. A close above this level would indicate that buyers have taken control of the market and prices could move higher in the long run. However, the price is currently unable to break this level. This suggests that sellers are still exerting a strong pressure on the market and preventing the price from moving upwards. Failure to break above the 200 EMA may bring the risk of further declines, but if the price retests above the 200 EMA, it is ready to move higher. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.